Good morning, everybody, and welcome to our latest Meet the Management podcast. For those who follow the series, you'll know that we are passionate about building an investor ecosystem in South Africa. And we're always looking for ways to engage companies who don't typically make it into the news headlines on a day-to-day basis, aren't typically in the top 40 on the JSE. And we're always looking to be able to engage with management teams at the small and mid-cap shares to be able to share some of their stories. Today, one of the most interesting companies, in my opinion, on the JSE at the moment is in the healthcare space. Company's RH Bophelo, and I'm joined by Yondie Metu, CFO at RH Bophelo. Yondie, thanks for your time.
Yes, thank you. I'm really happy to be here once again.
First question maybe for you. Just remind our listeners a little bit about what RH Bophelo is and the role it is aiming to fill in the South African healthcare space.
All right. Thank you for that, Mark. My name is Yondie Metu. I am the Chief Financial Officer at RH Bophelo. We are a health investment company listed in the Johannesburg Stock Exchange. We also listed in Rwanda Stock Exchange. Our purpose is to enhance healthcare services across the country. We operate in 8 out of 9 provinces. We have hospitals which are fully managed, and some of them are owned. We focus on improving access in healthcare services in the peri and rural areas. So our key focus is to ensure that everyone has access to affordable healthcare.
You just released your results to the end of February 2025. It's a very interesting time in healthcare in general, but business environment. Somebody who's not familiar with your results, what are some of the highlights and what are the kind of numbers that you guys focus on as a management team?
Yes, we released our results last week Friday, actually. So year end is end of February 2025. For us, this year's results have been quite, we call it a year of rebasing, where we've reached the 1 million NAV in the prior year. So last year was a pivotal year for us, transformative year. We have firmly stood in the 1 billion 1 billion NAV. And for us, that was a strategic pivot from asset heavy into asset light. And what we've seen in the current year is that some of our assets have started showing results. So the asset light have started showing results. We've got high impact investments in dialysis and radiology, and we've started seeing early contributions in that. So we think that the current year has been a resilient set of results compared to prior year, which was exceptional. Now, what we've seen is that the fair values have moderated because our assets have gained momentum, and now we're seeing new assets coming into play, which we didn't see in the prior year. So some of the things that we focus on as management is NAV. So for us, net asset value is quite important because that's where you see the value in the assets. So a NAV last year increased by 19%. In the current year, it increased by 4%, which for us we think is sustainable. It's a sustainable growth. We also focus in terms of EBITDA. So we've seen our EBITDA grow. We've seen also the underlying performance of the assets improving. So the current year dividend income received from underlying investments increased by 18%. So that is one of the things that we measure. We measure the underlying performance of the assets, which then gets seen through dividend income, but also gets seen in terms of the net asset value, which has increased.
So one of the questions that obviously comes up along the way is, if we compare yourselves to the other hospital groups such as Netcare, Life, Mediclinics, obviously going through delisting, when somebody asks you that question, what's your differentiator when compared to those hospital groups?
So a differentiator when compared to the larger hospital groups is that we operate in the peri and rural areas. So therefore, our clientele is totally different. We offer access and affordability. Therefore, we can never compare what the Big Four offers versus what RH Bophelo does. So we don't compare ourselves to the Big Four. We offer value, we offer affordability, and we offer access to people that would not necessarily have gotten the healthcare before.
When you talk about affordability, value, access, you can't help but come to the discussion around the national health insurance. Lots of discussions in that space at the moment. In terms of the expected impact on the market, do you see it as something that is positive for the business, neutral for the business, or disruptive for the sector as a whole?
Now, so for us, NHI presents a significant opportunity. So we see ourselves amongst the most cost-efficient operators. Therefore, we will be able to offer and service the public sector. So we also have available capacity in our hospitals. So definitely we'll be able to service the public sector. And also we want to collaborate with the government. So not only just to deliver service, but to reimagine the whole entire healthcare and make sure that everyone has access to healthcare.
Question before we get into the NAV one, which I think everybody's keen to get some feedback around. The listing on the Rwanda Stock Exchange, I mean, what is the thinking behind that? And have you seen any benefits from an investment or investor access perspective?
So Rwanda Stock Exchange, I mean, the question has come from our shareholders in terms of, do we still want to be listed, regardless of whether it's Rwanda or JSE? But for us, we see it as an opportunity. So we see ourselves as Afrocentric. So we want to offer access. And for us, healthcare is important, whether it's in South Africa or it's in Africa. So still we definitely want to be listed in Rwanda. We are now actually having some engagement with the Rwanda government. They are interested and we do want to have some footprint in there. So definitely see it, there's value in there and there's value in being listed in the Rwanda Stock Exchange as well. So we are looking in ways of partnering with the Rwanda government as well.
And then I think obviously the question, everybody looks at your financial results. You've got an NAV of just north of 16 Rand a share. I think you're trading at just around about 1 Rand 80 this morning, or at least bid 1 Rand 80 this morning. That's obviously a big discount to NAV. You guys use NAV as a metric in which to measure kind of exco and executive success there. Thoughts around that gap? Is it just a function of being a relatively growth business and taking a while for the business model to mature? Is it more structural in terms of lack of analyst coverage? And what are your thoughts around how you close that gap?
Yeah, so it is, I mean, it's one of the things that the board talks about in terms of the discount between the NAV and the share price. So for us, we actually think that the share price should be closer to the NAV because that's where the underlying value of the business is. However, we think that it's about perception, it's about policy, it's about liquidity constraints. And also we think that for us, what will happen is that if we remain transparent, we demonstrate consistent performance, the market then will itself correct. We will then see the share price coming up to closer to where the NAV is. So I think the fact that we've got growing assets, the fact that we've got the asset-light strategy that is now coming into play, the market is going to start shifting in terms towards where the NAV is sitting at. So that's our view. We think that it's a matter of time where the share price should follow in terms of where the NAV is sitting at.
And maybe just a last question, closing message to your shareholders for the next 12 months?
For the next 12 months, I think we are confident that we're on the right direction. We think that the asset light is better and more for the next 12 months, we think that we've laid a new foundation, the one that is leaner and smarter, and we've built a scalable assets which will grow. So for us, we think that the shift from asset heavy to asset light is one that will bring will build higher growth. It will increase the NAV and it will also increase the dividend. So we think that looking ahead, we're not only growing, but we're also unlocking value in the assets that we currently have. And we are excited with the new path that we've taken, which is reshaping healthcare delivery across South Africa.
I think with healthcare being such a topical story at the moment, I think this is definitely a story to follow. Yondie, thank you very much for your time and looking forward to engaging down the line and seeing the story unfold.
Thank you, Mark. This has been a pleasure.
Enjoy your day.